Good afternoon, and thank you very much for logging in this webinar. We'll try and make it run as smoothly and as quickly as possible, although of course on this side of the world it's rather early. So I want to just follow up a little bit more detail in terms of who I am and what I do, because the Ant system is an important extension to the work that we've done in the past. So as we were saying before, I've been involved in a number of conferences worldwide. I speak regularly in China, in Asia, Australia. I do some work in the US and quite a bit of work in Europe. So we have a reasonable background as to what's happening in terms of the market. So we're always looking to see how we can extend and develop the programs that we have in place. I am the author of a large number of books on market trading, and the most recent is Guppy Trading, which looks at how markets have changed post-global financial crisis. And the Ant system is part of what developed after the global financial crisis. So I'm best known in many cases for what we call the Guppy multiple moving average, which in its first iteration is designed to identify the strength, the stability of the trend, to confirm trend change points, and to give us some idea as to when it's safe to enter the trend. So it's normally applied on an end of day chart with a normal chart underlay. Most important difference with ants is the way that this refines the signals, gives the signals more clarity, and gives us a better opportunity to enter into trades, particularly in FX markets and also into index markets, E-minis, etc. So I'm not going to do too much more in terms of bio and my background. I want to look specifically at the sorts of things that we're doing. Now, these are the FX tactics that we prefer to use. What we're looking for is large daily range opportunities where our objective is to catch a large proportion of the move, 30 to 60 pips to 160 pips during the day. The entry is consistently right, and we're using size to generate the profit, not the number of trades. So the components of ants fall into basically 5 categories. And these are the important differences. First, the underlying chart is developed from range bars, not price bars. And that becomes a very significant difference in the way that the GMMA concepts are applied. The range bars are used as a basis for applying the SuperGuppy, and I'll explain these as we go through. The SuperGuppy is an extension of the construction of the GMMA that gives us a better understanding of the momentum of the trend and the amplitude of the trend. The amplitude of the trend is how fast and how rapidly the trend changes, and that has a direct bearing as to how we set the stop loss and whether the stop loss is more effective. Because what we want to do is we want to avoid being shaken out of trades. So imposed on top of this is the concept of the average daily range and the way that we apply traders ATR, an iteration of the average true range calculation that, because it's based on the range bars, becomes more effective. Again, we'll look at that in some more detail. Then we look at Ants, which is a proprietary algorithm that gives us more reliable buy and sell signals. It feeds off both the range bars, the SuperGuppy, and the ATR type calculation. We have an OBOS reaction band trading method, and Anthony will explain that in more detail. It's really the combination of the range bars, the GMMA, and the ATR calculations that is conceptual breakthrough. It's the use of the Ants entry and exit signals provides the practical application of this concept. I first came across Ants when I was approached by the Ants team to use my intellectual property, to use the Guppy multiple moving average. And I get lots of discussion on these sorts of things. I get many approaches. But this particular approach was unique. It was unique because both Anthony and Neil were prepared to sit down with a live screen, no scripting, no perfectly chosen examples, just working off what was running in the market at that time. And they showed me the application of Ants. They showed me how these signals were being generated and how this applied with SuperGuppy. So we decided we'd do a lot more work with Ants, a lot more work with the team, and we've come up and developed this particular Antssys system that we're talking about today. We believe that this is a significant breakthrough. And there are 5 major advantages. And I'll try and cover these very briefly before I hand over to Anthony for a practical, real-time demonstration of what's going on. First of all, here's what an Antss trade looks like on the screen. We have obviously the normal Guppy, SuperGuppy components. It looks to some extent similar to a Guppy multiple moving average, but there are some important differences. And the most important difference is the first one: the underlying chart is a range bar chart. Range bar means that when there is no activity during a period, then the time frame is compressed. It brings together some of the advantages of point and figure charting in the sense that it cuts out time and focuses purely on significant price moves. During periods of high significant activity, the time frame is expanded to show the price activity. So the construction of the range bar captures the significant price movements. This also means that the range bar has exactly the same reading across all time zones. It doesn't matter if you are trading the New York Open, if you're trading the London Open, the screen that you see with the range bar will be exactly the same. So the first advantage is that when the GMMA is calculated on the closing price of the range bar chart, this improves the identification of the underlying trend. It removes many of the confusing signals that would generate on a short-term GMMA and allows for greater trend definition. In other words, we're not getting shaken out of the trade by false signals. That's a key advantage. It takes away some of those false signals. Now, when we combine this with a SuperGuppy, in other words, the Guppy calculation, the Guppy moving average calculation is based on the closing of the range bar, not the closing price. Then we get a great deal more information about strength of the trend and the amplitude of the trend. When it's calculated as a starting point, there is a clearer understanding of the trend strength and the limits of the trend. One of the key concepts is bubbles. The bubbles in the SuperGuppy are more accurately and easily identified, and these are more reliably used to identify pullback and trend retracement opportunities. And this lies at the very heart of the Antss system. And you can see here how normally we have this very, very large separation. This is a classic bubble environment within the SuperGuppy multiple moving average, so that we have a high probability of a pullback developing. We have a higher probability of being able to join this trend and remain with it for an extended period of time, and to identify genuine retracement activities through here and trade this downtrend rather than being shaken out on either of these smaller trends here. So the bubbles in the SuperGuppy are more easily identified and they're more reliably used. That takes us back to our third key advantage, which is on the back of the Antss algorithm itself. But we start first of all with the range and the ATR calculation. Now, average true range is a concept that's widely accepted and widely known. It's applied normally to a price bar chart. But here, the ATR stock is applied to changes in the activity of price based on the range breakouts. And this is the key advantage. When we apply an adjusted ATR calculation, it uses the modified range bar and price time frame for the stop loss calculation. This results in a more reliable ATR signal because range is at the very heart of the ATR calculation. It's more accurately defined. It becomes a derivative of a derivative, and we've found that this significantly improves reliability. So when we combine this with the Antss system on the GMMA, what we find is it reduces the noise within the market. So we get a clearer confirmation of the breakout that's taking place here. We are using the ATR as a trailing stop loss. We can ignore these potential exit signals here where it changes color, simply because the GMMA, the SuperGuppy, is showing us that the strength of the trend means that we can ignore those with safety. However, once we move into this situation where there is wide separation within the SuperGuppy, then we can take the exit signal and capture most of this run sitting through here. The SuperGuppy and the ATR combination removes the market noise and delivers more reliable entry and exit signals. On top of this, we apply the proprietary Antss indicator. This algorithm provides an entry and exit signals and an ongoing confirmation of the trend direction. Reliability is increased because only significant price activity is used in the calculation. The range bars remove the market noise, and Antss identifies the clear trend change signals. When we bring these two things together, we get an increased reliability in the system. We eliminate a large number of false exit signals. We're able to apply a more reliable stop loss, either on the long side or the short side. And when we apply this in an FX system or a trading E-minis, we are finding the results are substantial and outstanding. The final part of the suite is what we call OBOS reaction bands, and Anthony will explain these in more details in a moment. So these to help us to define the levels of high probability of price reaction and reversal. The reaction bands set the price targets. This is the core of the ETET Antss trading suite as well. So this is moving well beyond Bollinger Band concepts because the underlying trend, amplitude and size, is defined by the SuperGuppy. We are using the trader's ATR based on a range bar chart that gives us a more reliable definition of range. This combination provides superb trading opportunities. It gets us into a range of short-term trading opportunities with a high probability of success. Here's an example here. Here's another example of Antss trade management where we're looking at both a longer term time frame and a shorter term time frame, picking up those 30 to 60 to 100 pip trades. They are the sorts of daily trading ranges, the daily trading that just locks in consistent profitable returns. But what I'm going to do now is turn you over to Anthony, and Anthony will show you how this operates on live screens in today's market right now. Thank you, Anthony.
Thank you, Daryl. I'll just bring my screen up. Hello, everybody. Okay, so hopefully everybody can see my screen now. If you can just say yes in the chat, everybody can see my screen. Yes, my eSignal screen. Okay, good. Okay, so first thing I'm going to do is show you a typical chart, and I'll then add all the various components to the Antss SuperGuppy suite to show you the how it identifies the trend, clearly identifies the trend, the change in trend, and then the signals to show you to give you the high probability entries. So first of all, to identify the trend, we'll add the SuperGuppy. So as you can see, SuperGuppy is there. It's an evolution of Daryl's GMMA concept. This clearly shows trend changes in trend here, here, and here. Also, to confirm that change in trend and trend in a more visual way, we add the multiple moving average crossover indicator, which will then color the bars based on what the SuperGuppy is actually telling us. So it gets just a more visual representation of trend. And you can see where we get the change in trend. You can see where the color of the bars here change from green. They actually go yellow in this instance, and then to red. Now what the yellow does is gives us a heads up of there's a potential change in trend. Okay, see there, it thought it was going to change in trend there, didn't quite change, goes back to red, and then obviously a huge move up, which was probably news, which brought this straight up. We get the change in trend. There is a yellow candle in there, we can just see. And we get that change in trend back to green, etc. Next, when we get the change in trend, what we're looking for is a pullback, and we're looking for a safe zone to enter our trades, and we provide a channel indicator as well. And what this does is gives us a safe entry zone. So we're looking for price to come back into this zone ideally to get to get our entries. And then finally, the ANTS, the buy and sell signals. Now here you can see everywhere where it's actually firing an ANT, a buy or a sell signal. And what we can do, we can actually filter all of these ANTs so that so what you're seeing right now is every signal that ANTS fires. Now this is not a trade every signal strategy. What we need to do is we need to actually read the Guppy. We need to look for these changes in trend. And it's these initial signals after the change in trend that we're looking for. Ideally, we're looking for this type of setup where we get the change in trend confirmed by the changing of the SuperGuppy, the colouring of the bars. We can see the ANTs firing. Now, it's not necessary that we need to take these signals here. What we want is the pullback. We're looking for the pullback into the SuperGuppy and into this channel. And these are the high probability trades. This is ideally what we're looking for. If I scroll back, we can see more examples. Again, you can see this change in trend here, the pullback into the SuperGuppy and inside the zone. We get the buy and sell the buy signals here, and up the chart goes. Again here, change in trend. We don't get the pullback there. It keeps going. So I personally would miss that one. I'd let that go. I want the retracement. I'm looking for the retracement as close to the base of the SuperGuppy as possible, inside of this zone. Look for these signals here, and that's where I would personally enter my trade, and then up it goes. Again, we get the change back, we get the pullback, we get a change in trend there, so we might lose a little on that one. Scroll back a bit further. Again, comes down, pulls back, change in trend. We've got the pullback inside the zone, goes up. Again, another nice pullback there. And this one's particularly nice because the guppies have all changed. The SuperGuppy has all changed over. The band is the zone is. Sorry, the SuperGuppy is all twisted over to the correct direction. We've got the pullback into the zone. Nice long signal there, and up it goes. Next, we talked about, or Daryl talked about the targets. If we come back, the next thing we've got are average daily range levels. Now, statistics prove that the chart will move to 75% of its average daily range 85% of the time. Now, what we've got on here, as you can see, if I just zoom in, so you can see the chart a bit clearer, you can see these levels here. Now, what I've got plotted here are 50%, 75%, and 100% of the average daily range. Now, the settings I'm using for my average daily range are the last 5 days, purely because I feel that the last 5 days price movement is the most relevant, and therefore higher probability of me reaching 75% of its average daily range if I'm in a particular trade. So go back to this long that we pull back here into this zone. We've got this long signal here. So my target, if I enter my trade here, my target would be the 75% average daily range, which is this level here. And on this particular chart, this particular trade, I would have exited that with a 45-point profit. Now, in terms of stop loss, this is my safe zone for entry, and basically, I believe that if the price comes at the wrong side of this zone, then we're actually going to get a change in direction of the SuperGuppy, and therefore below this level is where I would have my stop. So at this point, I'm looking at about a 15 pip stop. and I've got a 3-to-1 reward to risk on that trade, which is a nice trade. So the way this zone is set up, if price continues to fall beyond this zone, we'd get the change in direction, and therefore a buy signal there would then become invalid. On top of that, we've got, if I just take the ADR levels off, again, Daryl talked about the trader's ATR, which is this line here. So just looking at this particular trade again, I entered the trade here, and I followed this ATR stop up. On this particular trade, you can see that, but that's the level where it closes beyond the other side of the trader's ATR. That would give me a 48 point profit on this particular chart. And with the chart we're looking at here is the YM, the Dow E-mini, and this is a 3 pip range bar chart. Okay, so that's the Ant suite of indicators all put together on that particular chart. If we, I can show you. I'll just go to the YM. Now this is the overall strategy that I trade. This is what we call the 3-2-1 strategy, and basically it was developed from trading the E-minis. And what I'm using, this top chart here that you can see, the long chart at the top, is the YM 3R chart, and then bottom left I've got the YM 2R chart. So we've got a 3 pip range bar, 2 pip range bar, and then the bottom right chart is the 1 pip range bar. Now what I like to do is I look for this, so go to the 3R chart, this top chart. So I'm looking for this change in direction, which happened this morning, 7:30 this morning. We get the change in direction and the pullback. So if I just click that chart, and it'll bring the 2 and the 1 in line. What I'm looking for is the 3R chart gives me the direction. I look for confirmation on the 2R chart, and you can see we've got the SuperGuppy's changing direction. We're getting a pullback on the 2R chart and the bottom left chart. And then I look for my entry then on the 1R chart. And you can see at this point in time, we get the pullback, we get a signal here, and that's the start of the move up on the 1R chart. So if we go to the short that happened here, we come to the point where the change in direction went from green to yellow. We can see the 2R and the 1R chart. 2R chart, perfect looking change in direction on the Guppy, on the SuperGuppy, and the pullback. And at this point, perfect entry there on the 1R chart, where we've got the change in direction, we've got the pullback, we've got the confirmation, and that was a lovely trade down. So we've got, that's a 90 pip drop to the bottom there, 90 point drop to the bottom of that first move. Staying with this chart, so we've still got the direction on the 3R chart. We've now got a pullback on the 3R chart, which is natural. We've got the move, the pullback. We've still got the confirmation on the 2R chart. And then we look for our entry on the 1R chart, and we get sell signals in here. And again, it's a 70 point move before large retracement. Okay, I'll just switch to the ES chart. So this is the S&P E-mini. Same principle. Again, you can see this change in direction, pull back, and we've got the pullback on the 1 tick chart, and we've got a 9.5 tick move down in total on the ES, which is pretty good on the ES. Same principle for the NQ. So we switch to the NQ chart. 1R chart at the top and a 0.25R, so 1 tick on the NQ. Exactly the same principles. So we can see this change in direction here, pull back, switch to the 1 tick chart, look for our entries. We've got long entries here on this bottom chart here, and a 20-point move up on the NQ. So that's a sizable move on the NQ. It's a nice trade. Again, we get the change in direction here, the pullback. Let's bring the chart in line. Okay, we got a failure on this one. Look, we've got so this is the first point where we get the confirmation. If we're entering the trade there, we lose 4 points, but then we get clear entry here. You can clearly see on the 1R chart at the top, we've got the pullback and the continuation, which is what we're looking for, and then we get our entry here, 12-point total move down on the NQ, which again is a nice move on the NQ. We can apply the trader's ATR or the ADR targets again on these charts. It all depends on how you like to manage your own trades, but these are the utilities, the indicators that we use. Now let's take a look at an FX chart. Okay, so we've got, you can see on the watch list on the top left hand side of my screen here, list of currencies, and then you'll see this column here, which is part of the indicator suite. This is the watch list average daily range indicator, and this calculates average daily range for each currency pair and just gives us an easy view of which currency pairs are moving well. Again, I've got this one set to the last 5 days, and you can see the top moving chart in terms of average daily range is pound against the New Zealand dollar, with 124 pips average daily range at the moment. And again, this is the same principle really. We've got 3 charts, 3, 2, 1. This top left chart is actually a 10 pip range bar chart. The top right hand corner, we've got a 5 pip range bar chart, and then the large chart at the bottom is a 2 pip range bar chart. It's the same principle as we've just gone through on the YM and the ES and the NQ. So we look for direction on the 10 pip, we confirm direction on the 5, and we make our entries on the 2R chart. So you can see this last few days we're in an uptrend on pound New Zealand. I'll just adjust the scaling on this so you can see more of the chart. So we're looking for longs. So this was first thing this morning, so around 7 o'clock this morning. So the 10 pip range bar chart is telling us that we're in a clear uptrend. Everything's nice and green. Lots of green ants firing. Lots of buy signals on the 10 pip range bar chart. If we have a look at the 5 pip range bar chart to confirm our direction, so which we get our change in direction here. So you can see on here we got a nice pullback there, and you can see on the 2 pip range bar chart we've got nice ants firing here, where we've got this change in trend here with these grey bars. We've got the nice confirmed uptrend on the 10. We've got the change in direction here on the 5, and we've got lots of ants firing inside the zone after a nice change in direction and pull back into the zone. So again, taking that trade. Total move up to that point there. It's a total of 57 pips. Total movement up. And again, depending on how you manage your trade, whether you'd go for a set target profit or 75% of the average daily range, or the trader's ATR, however you manage your trades. But there's a nice entry there, confirmed on the other two charts. Decent move up. Now, Daryl talked about the what we call the ETT strategy, where we're looking for these overbought, oversold areas. You can see these zones on the 10 pip chart I've got here. I've got the zone inside, and then we've got these outer bands, which is overbought, oversold levels that Daryl was talking about. What we're looking for is when price goes outside of these levels, the market's overbought in this instance, and it will need to revert to the mean. So it will need to pull back into the SuperGuppy, because as you know, in any given trend, we've got a move, a pullback, and a continuation. So what we can do when we've got this bubble in the SuperGuppy, we've got price outside of these overbought, oversold levels, we'd be looking then to go straight to the shorter of the range bars and look for a short signal there, and we get a nice short signal at this point here. So we get our entry here, and we'd be looking to trade this back down to inside the zone on the 10 pip chart. So once price gets back inside this zone on this 10 pip chart and on the top left, that's where we're looking to trade this move into. And you can see this move is a total of 102 pips to its low. So exit the trade anywhere around here, and that's a nice healthy profit on that retracement. We can take a look at a different chart. Can we look at? Sorry, I was just looking at the questions. Mark's asking, can we look at the right edge of the chart? What it's telling us right now on the pound New Zealand, Mark. Is that what you're asking? Or the S&P? Yeah. Okay. Let's have a look at the ES. Okay. So this is what's happening right now on the ES. I'll just zoom in here. Okay. So you can see we've got a change in direction. We've got a pullback, and the trend is turning green, so therefore turning up. And we've actually got a buy signal firing now, right now, on the ES 0.25R chart. And you can see again, nice clear change in direction, pullback. The guppy's turned, the SuperGuppy's turned. It's found support at its mean, which is the base of the SuperGuppy. Fired a signal. Obviously, we're quite late on in the day. Cash markets are closed, so this is potentially going to be fairly quiet. But that's the idea. Let's have a look at a few more. Okay, Nick S is asking, how many days or hours do you need to calculate the daily range line? Okay, well, if we're looking at I'm looking at a 5-day average daily range. Now the watch list indicator, you're going to need to load as much data in there as possible, depending on how many days back you want your average. You just need to make sure you've got enough data to create your average of X amount of days. I typically keep 20 days data loaded on my charts and 40 days of data loaded on my watch list indicator. Well, what's enough? Nick is asking. Enough data to create your average. So if you want the last 5 days average daily range, you need the last 6 days of data to create your average. If my maths are correct. Okay, that's me done. So if that's okay, I'll hand back to Daryl, and we can then. Okay, Daryl. Hello, Daryl. Are you with us?
If I unmute my microphone, it makes a very large difference, so I discover.
Okay, thanks.
My apologies for that. Okay. These things, as Anthony has taken us through in terms of some recent real-time trading, it gives us some reason. What we can say is that the GMMA is used for identifying the trend changes, and that's always been the case. But once we move to a SuperGuppy environment, then it clearly identifies the trend change. It isolates a safe entry zone, and then we generate a high probability buy or sell signal, which are confirmed by the Antssys SuperGuppy algorithm. And that's an evolution, a development of GMMA. It gives us clearly defined exits and clearly defined exit targets. One of the key things I find about Antssys is that it is an extension of the work that we were doing, but by bringing it into the range bar environment and then applying the Antssys algorithm signals on the basis of that, it improves reliability. No, we are not interested in taking 6, 7, 8, 10, 12, 14-day trades. This is not long-term position trading. This particular approach is ideally suited for shorter-term trades, shorter-term rebounds. What we want to do is feed like a sparrow. Lots of little bites on a high probability basis that give us a confirmed and consistent trading scheme. And confirmed consistent trading results. So for further information, it's on the screens here in terms of 30-day free trial, eSignal support. You can get a copy of this presentation, user guide, frequently asked questions, how-to videos, etc. Now I've seen one question here, does the software work only with eSignal 12? It can also work with 11, etc. But perhaps now we go to broader questions. It's the easiest way.
Daryl, if I can just jump in on that question that Brian K asked, does the software work only with eSignal 12 or can it work with 11? The software was originally developed on eSignal 11. However, it's not currently in the eSignal 11 package as standard. The indicators are in eSignal 12, and you can activate them by calling eSignal or activate them in your login area. We'd need to talk to the eSignal guys to see if it's possible to actually make the indicators available for eSignal 11. It does work with 11, but it's not actually in the add-on studies section. So I think it's something we can pick up with the eSignal guys. Brian's asking, is eSignal 12 stable? I've been using eSignal 12 now since its release, and so far I've not noticed any difference in performance or reliability issues in comparison to eSignal 11. So I was happy to upgrade, and I'm actually running both platforms. I'm running 11 and 12, so having to test the software on 12 as well. So I'm not getting any issues. Okay, sorry, Daryl.
No, I have nothing to add to that.
Okay. Okay, Nick S is asking what the percentage of winners and percentage drawdowns since using short time frames. That's a difficult question to answer because we obviously as traders we all trade differently. We trade different trade management. This is not a mechanical system in a sense where we could let a robot just run this for us. What you need to do is look at the change of direction in terms of the SuperGuppy. So it's about reading the SuperGuppy, looking for that change in direction, and look for the pullback. It's those initial signals that you get are going to be the high probability trades. As you can see, as you've seen on the charts, Antss fires a lot of signals, and we can filter those signals from within Antss. I probably should have shown you that, but we can filter the signals based on at the moment 2 different filters, so we can get the chart to show us only these signals where that are inside that zone, which are those ideal high probability areas, or we can use the stochastic filter as well. So we can actually use stochastic to filter out the signals. So we will only then, in an uptrend, we will only see any signals that are produced when stochastic is oversold, and therefore, and likewise in a downtrend, it will filter the signals, so it will only show signals that are overbought.
So I can add to that a little bit, Anthony.
Yeah.
The key factor is that this tells us when we're in a high probability trend change situation. Now, how you decide to trade that, when you exactly decide to enter, that's up to you. It's not a mechanical trading system. It still requires some user input in terms of how you wish to trade it. And that will depend on your own levels of trading aggression, whether you are aggressive, whether you are conservative, whether you're entering in anticipation of a change, or whether you're entering after confirmation of a change. So the precise entry point is up to you. The environment, the trend change environment, has been identified with a high level of reliability. Your precise entry point is your decision. How far you take that trade is another question as well. But what we find in our work that we've done is that we're getting about a 75% reliability rate for the sorts of methods that we prefer to use. And we tend to be a little bit conservative in our entries, not quite as aggressive. We're looking for confirmation before the entry is taken, and we're taking out a predefined range targets or tightening up the stop loss as it goes through. So the exact results that you get will depend on your particular trading approach. Now, this doesn't apply just to what we're doing here. It applies across the board to any trading system.
Another question from Brian asking how fast do range bars change in time, and basically range bars print in the same way time bars print. They print in real time, as does tick charts. Any of the time frames built into eSignal. Nick S asking, are the range bars on a raw tick basis as they develop, or is it fixed coded on ticks? I'm afraid that's going to be a question for the eSignal support guys. I'm afraid I don't know the workings of eSignal. So perhaps if one of the eSignal support guys can answer that one. Okay, are there any more questions?
Yeah. Hi, folks. This is Ben from eSignal. I will take that question back to our eSignal support team, and Nick, we will try and touch base with you and provide that in a follow-up, either email or post it on our KB website.
Okay, Daryl, if you'd like to wrap up.
Okay, how to wrap up. I trade for a living, and I've been trading for a living for 20 plus years. And I'm well aware that there is no system out there that I've managed to find that provides a perfect solution. What I'm looking for is an approach that understands and identifies the trend changes, identifies them with a high level of reliability, that allows me then to apply my trading analysis in the way that I choose. In other words, I want to be able to decide if I'm aggressive because the market's in a very bullish phase, or whether I'm a bit conservative because I think the overall market's pulling back. I need to be able to have some discretion as to exactly how I make my entry point. Remember, the difference between trading and investing is simple. Investors worry a great deal about the entry point, but traders worry a great deal about the exit point, because it's the exit point that locks in our profits. Now, one of the key advantages that we find with the Antssys system is that it identifies our entry point. We can choose the exact entry point which we are most comfortable with based on a predefined set of ranges and a predefined set of conditions. But more importantly, our trailing stop loss based both on the Antssys system and on the ATRs are getting us better exit points and capturing more profit on a consistent basis. This is the key factor. Most of the trades that you enter are developing successfully. We're missing some of the longer term runs. That's not important. What we're picking up is the daily moves that are taking place on a range bar basis. This is by far the biggest advance in the GMMA approach that I have seen since I developed this particular concept. It brings in this concept of range bars, and that captures the volatility and the changes in volatility that are taking place in the market. And in today's modern market, volatility is both an opportunity and also a killer for most trades because of the number of false exit signals it generates. This gives us a solution that allows us to clearly identify the strength, stability of the trend, and to trade on entry points with high reliability and to exit and take reasonable profits. I certainly recommend that you give it a trial run. There is lots of support available. We've taken a great deal of time to develop training webinars, support programs, user guides, answers to frequently asked questions, videos, etc. I look forward to you trialing this and testing it.
Thank you, Daryl, for that recap. Hello again, it's Ben David from eSignal. As a reminder, this slide will be available for you for the next couple minutes to help you get the most out of eSignal and Antssys' products and services. Make sure to check out our website for more product information. At this time, I would like to thank Daryl Guppy again and the team from Antssys for taking time out of their schedules to spend time with us. I would also like to thank all of you for coming to today's seminar. I hope you found this seminar beneficial. If you have any follow-up questions, please do not hesitate to contact us. We would be more than happy to answer any questions you may have. We hope you have enjoyed this webinar and will join us again soon. At this time, I will be closing out the webinar. Thank you and have a good rest of your day.